Now, the United States Senate and the House of Representatives voted last night to reopen the government and raise the nation's borrowing limit, ending a 16-day shutdown that brought the nation close to default. Joining us now is George Klinos, Managing Director as well as Chief Economist at ETM Analytics. George, the last-minute deal being struck yesterday afternoon, our time, naturally expected, but is it a big deal?
Well, it turns out in the end that this was more of a farce, and I think just politicians playing a game of brinkmanship until the 11th hour. So it's difficult to now call it something significant. They should have gotten this done many months ago. I mean, people forget that the debt ceiling was in fact reached on the 19th of May. This year. So this has been going on for quite a long time. It's not like the negotiations only started a couple of weeks ago. It's just that a couple of weeks ago they started to get a little bit serious because they were running out of time, of course. So the fact that we've finally dealt with this, I think, is the market was prepared for it. They were anticipating it, priced for it. So hence you haven't seen a huge amount of response post that announcement, and I think rightfully so. This should have been done and buttoned down long time ago.
It's interesting. It goes back to, remember Bill Clinton, who was just about to lose or just about to get kicked out of the White House, and then the Republicans helped him as well in a similar way in the last time round. So I guess this is going to pave the way for Hillary to become the next president. Another lady.
That's what's going around the rumor mill there.
What does George think of that?
Well, I think the Republicans didn't do themselves any favors in this. If the opinion polls are anything to go by, they've lost quite a lot of face. Certainly they've lost quite a lot of public support. And the fact that the Obama administration remained as firm as they were in terms of their negotiations, I think shows one that they did in fact have quite a lot of popular support behind them in this whole thing. So from that perspective, going into midterm elections next year, it's going to be very interesting to see whether or not Obama and the Democrats, more to the point, can secure the House of Representatives as well. They've got the Senate, they've got the presidency. If they get the House of Representatives, watch the space, because you'll probably find the Obama administration pushing through quite a lot more that they haven't been able to thus far.
We also know that ratings agency Fitch has placed the US on a negative outlook. Coming closer to home, there's news that Moody's has downgraded South Africa following BMW's disinvestment from South Africa. Another shock to the system.
You know, it is and it isn't, because I think in the case of America, I would certainly agree with the ratings agencies. I don't think this sort of behavior is the kind of behavior that you would expect from a AAA rated country whose bond market is effectively used as the benchmark for asset pricing around the world. So we need to, I think a point needs to be made there, and I think the rating agencies have done it. In the case of South Africa, turning our attention locally, this has been a long time coming. I mean, we're pinpointing it on BMW, but let's be clear, we've been running a very uncomfortably high budget deficit now since the Great Recession back in 2008 and 2009. And we really haven't come to grips with how we're going to narrow that budget deficit. And long before BMW made this announcement, we already had a credit ratings downgrade, and it was for all sorts of structural reasons having to do with imbalances in the South African economy, the inability of government to be able to tackle some major issues. So I think that really is the key focus here. BMW story I see more as a symptom rather than a cause of a credit ratings downgrade. It's a symptom, and it's a symptom of a far bigger issue, which to my mind we need to take a step back, pull back the lens, have a look at South Africa and the general trend that we've been going on over the past 4 or 5 years, and recognize that perhaps there's quite a lot that we could have done better, and that government needs to get on top of this fiscal issue. And that's why we're looking with great interest at next week's medium-term budget policy statement, because we want some guidance as to how they're going to start making their fiscal space more sustainable.
Yeah, but you've got to take issue on a number of those points. First of all, in the budget speech last year, Pravin Gordhan did roll back a whole lot of spending, an enormous amount of spending. I think it was something like 20 billion that they managed to cut off. The second thing is our fiscal deficit is extremely healthy when you compare it with the US, the UK, Germany, pretty much anywhere else in the world. So they have been counter-cyclical. In some ways, I think the rating agency just seems to find the bad things about South Africa and doesn't really give us credit for the good things. Of course, we can get better.
Yeah.
But with BMW on the one side, you've got Mercedes saying they're going to invest more.
Yeah.
So it's hard to keep a balance, I guess, if you are a rating agency.
Yeah, again, like I said, I wouldn't place too much emphasis on the BMW story in terms of the actual ratings outlook. I guess the point is that it's horses for courses, and one has to assess each economy on its own merits. And at the moment, we need to appreciate that South Africa, in terms of the growth that it's generating, for example, is well below par, well below what fellow African countries are able to generate, and well below what other emerging markets are being able to generate.
But your point is well made, that the mini budget that's coming is just around the corner is going to be quite important.
Quite right.
We need to watch that. We haven't done much research on that yet. I know what I'll be reading about this weekend.
Well, so do I. Thanks so much, Georgia. It was a pleasure speaking to you.